Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Friday, May 22nd, 2015. The question bar is open, folks. Feel free to ask any question. It will be my pleasure to ask them, to answer them, I mean. Now, with the market situation here, we have a market situation where we remain neutral. It's still a market, American markets, that remain really boring because really this neutral phase does persist. I wanted to bring to your attention the SPY here, because the SPY, as long as we do not go below 212.50, which is that important support, there's no need to be worried about the acceleration of a bearish momentum on the SPY. So for me, the SPY, as long as it remains neutral, there's definitely no need to actually close either the bearish ETF you've opened on the SPY when we had this cycle here, the beginning of a bearish cycle here, or when we had an attempt to start a bullish cycle here on the SPY. So 212.50 remains the target, the point mark where the SPY needs to go lower to actually confirm a clear closing of all the long positions you have open on the recent rally on the SPY, especially towards technology, industrial stocks. Those have been the main leaders on the rally today on the SPY. On the TSX, there's still some weakness. We remain neutral, and on the TSX what we have oil that remains weak. However, all the physical resources, oil, gold, silver, natural gas, at opening they went down, but so far I've been unable to confirm another bearish momentum. So you see here for USO, we went lower, we tested 2015, we stabilized there, so we need a new bearish momentum. So we need to go below 2010. And if USO goes below 2010, we have 2 targets possible, 1961 and 1980. And if ever we do have that, well, what bearish ETF will be interesting? HOD. So far, I think HOD is too premature to get it into HOD, but I think we need to see a clearer confirmation. Monday, American markets are closed, so we don't expect a lot of volatility today on the American markets. Concerning gold, it's almost also the same situation. I was reading an article in gold saying that demand for gold has actually declined. And if you take a look at gold, we need gold to go below 115.35. If it does go below 115.35, next target now becomes 114 on gold. And which ETF could you do to trade that? There's HGD. Natural gas as well is also in the situation that's really interesting. But for natural gas, it actually has been way more interesting because we have been able to confirm a clearer bearish momentum in natural gas. But in natural gas, the thing is, look, all this congestion with all those moving average. So those of you who have opened some positions on HND on the TSX or DGAS on New York that we have recommended on MarketGurus.tv for the best day trading opportunity, well, your potential is limited towards 1378. So if you're buying a bearish ETF on natural gas from 1419 to 1378, this is actually the target that you have in terms of profit-taking opportunity on those bearish ETFs. So it remains really limited. Now, with the weakness among gold, there's also been some weakness among the gold sector. And for this, we had to act. For instance, in MarketGurus.tv, we had to close one of our long positions in the gold and silver sector. It was Pan American Silver. Reversing of this upward trend, breakdown of that sideways formation. So we had to close that long positions on Pan American Silver. It's unfortunate, but we have to remain disciplined, especially under those market conditions. Now, for the US dollar today, we had the US dollar that surged slightly. What happened is that we had inflation numbers that came out. Inflation numbers in Canada and the US remains below estimates. However, the core inflation, meaning that not taking into effect the energy, which actually has been going down, and this is one of the reasons why inflation overall in Canada and the US remains negative. But the core inflation that doesn't count energy, that core inflation is actually around 1.6%. So which means that when inflation surge, investors are expecting a rate hike, and this is actually bringing some money into the US dollar. So the US dollar, I think it's really unlikely that we might have a rate hike because the Fed said that it will be based on economic indicators. So far, I believe that the US dollar rally could come to an end, and right now we're due for a stabilization phase with this overbought situation. So why I say that? Overbought situation here. Congestion with all the moving average, right, on the US dollar. So those will be actually the technical indicators I'm using to determine that we might actually have a pause. I think it's due for a stabilization phase between the 50-day 25.23 and the 100-day moving average 25.01. And this actually slight rally has actually been negative for gold, but so far it's going to be tough to tell what's going to be the new US dollar direction. We know all the currencies, euro has been going down, but so far the US dollar strength will be determined, I think, by this trend of the economic indicators. If for the next few weeks we have strong economic indicators, well, we might see some investors saying that, you know what, maybe the Fed is going to raise interest rates, so let me invest in the US dollar because we're going to have a higher interest rate by investing into the US dollar. So this is actually something that could actually trigger a wave of buyers. But so far, I think it's going to remain neutral between the 50-day 25.27 and the 100-day moving average at $25. Now, there's one sector in particular where we do have you could say a possibility bearish momentum that could be confirmed, but I think it's kind of too early because, as I said earlier, we want to see the SPY going below 212.50. If we do have that, well, then I think we might have some breakdown on the defense sector. Why I like the defense sector as a short is because, look, we have the 10-day that's below the 30-day moving average. I agree. There's the 100-day moving average there at 260. However, if there's a bearish momentum that's confirmed on that sector and on the SPY, we could reach 255. So there's about, what, 10 points or more to be gained on that short position. General Dynamics actually would be a short-term short for if it does go below 138. Well, the support is at 129, right? So there's that possibility there. Kratos Defense, no, it's mostly a neutral stock because, look, we're still bounded with all this neutral cycle there. So yes, it's a slight sideways formation, but it's a breakdown. But look, there's all that support that's there. So for me, I will not even consider it. Curtis White might be an interesting one. Clear downward trend. Stochastics overbought. The only thing I don't like is the volume. 31,000 shares being traded. That's not something I like. L3 Communications might be interesting as well, right, for a target of 113, so $6. And Raytheon, but the Raytheon, the thing is that all this congestions, all this support there at 103, so the potential is not really there. Lockheed Martin might be more interesting for Lockheed Martin because we still have all this downward corridor that is there on Lockheed Martin, and if we could break 190, well, that would definitely be a nice short opportunity for Lockheed. And let's not forget Mentech, but Mentech volumes is 31,000, which is not really nice. So on most of the stocks in the defense sector, Mentech or Curtiss-Wright, which are actually some of the best with the biggest potential, the volumes is not there. So this is actually something that kind of make us be worried with the defense sector on the US. With the Canadian side though, it's really a pause, especially with the energy sector that was leading the rally yesterday. Today we have a correction on the energy sector, so there have definitely not been any movement. If you bought some breakouts yesterday, for instance, I know I've mentioned PD, Precision Drilling. Today we're losing 3.34%. Look, the stock is still above its support. There's no need to close that position. You should continue to hold on to it as long as it maintains its upward trend. So there's really no need to actually close that positions if you've opened some positions in the energy sector, because the sector with today's correction will just possibly get back within its solid formation, and as long as it remains above 220, there's no need to close that position. If we make a follow-up on the industrial sector, we still have a bottom that's confirmed on railway stocks, CP, CN. So if you were looking to acquire some railway companies, well, today it's actually one of the best opportunities to do so with those stocks that are confirming again and again a bottom. And if you're buying them, make sure you put your stop loss below their support, below their low. So for CNR, it will be below 73.38. For CP, it will be below $209, $208 for a stock like CP. In terms of the news, we had one news on BlackBerry. BlackBerry, they announced that they will buy back some share, 2.5% of their shares. I believe BlackBerry, it's a great breakout today. So if you want to get into BlackBerry, I think it's a great opportunity. And the buyback is only something that will add on to the upward momentum.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
In terms of the other news that we had another news on OpenText, where OpenText, they said that they lowered their profit earnings estimates for the 4th quarter. They will cut their workforce by 5%, and they announced that some key executives might get out of the company. There have also been the earnings of HP, HPQ, sorry. HP, they did well. However, that stock here was unable to go higher than its 200-day moving average. So for me, it's not the ideal timing. I think Monday American markets will be closed, but I doubt that HP will be able to pursue its rally and head towards $37 because, first of all, there's this 200-day moving average that's there. And also on HP, by putting a Fibonacci retracement, we see that we have reached the 38.2%. So this is normal that at this point, we actually have a stabilization phase on HP. So for me, HP, it's definitely not a great buying opportunity, even if they release strong earnings. And yeah, and Deere, John Deere, DE, actually what they announced good earnings. They beat estimates, but revenue have declined by 20%, but still John Deere, pretty nice for John Deere, right? But there's a top that's there. So really John Deere, it's more for the medium to long-term investors. And if you're buying John Deere, you're betting that the Chinese economy is gonna do well, right? Eventually, because right now we know that the last manufacturing data was not positive, was as contracted. And you're betting also that other economies, that the Eurozone economies are going to adopt some potential reforms, and eventually that's going to lead to higher sales in terms of industrial machineries. But so far, John Deere, those of you who want to buy John Deere right now, I think it's more for those of you investing for medium to long-term horizon. Now, Rick, you have an interesting question here about YFI. Is it a buy? Well, let me start with the things that are interesting with a stock like that. Clear upward trend, which is nice. Active for intraday, right? 10-day above the 30-day moving average. So those are the good things. You could trade that stock and hold on to it as long as it maintains its upward trend. However, those are the risks I see. First of all, stochastics totally overbought. So it's really likely that we will have a correction. By putting the intraday chart, we see that we're testing the top of an upward corridor, and we have been unable to go higher than 56 cents on YFI, which confirms that we are actually testing a top. Overbought stochastics as well. So for me, YFI, when we have this overbought stochastics in the intraday chart, on the daily chart, when we have also volumes that are weakening, those for me are all signs that it's not that great to get into a stock like that on YFI. However, I think that if you're comfortable to tolerate a correction, well, those are your points where you should actually put those are the points where you should actually put your exit point. So let's say, you know what, I want to buy it right now on YFI. I've made my analysis in the company. Fundamentally speaking, I believe in the company's fundamentals. Well, stay technical intraday wise to put your exit point. So you could put your first point to reduce your position if the stock reverses this short-term upward trend. So if it goes below 50 cents 40. And the other exit point will be if the stock reverses that medium upward trend. So if it goes below 45 cents. So those will be actually two exit points, that will allow you to minimize your loss potential on a stock like that if you are trend trading it. But right now, I think that with the weakening volume, with this overbought situation in the stochastics, with the fact that it has tested the top of an upward corridor and has been unable to make a new high, I think it's getting really, really far away, and I think it's more due for a correction for YFI. So those are the reasons why I think that personally I would not invest into a stock like that. Now, as for the best day trade of the day, there has been EFN on the TSX that has been really active. This company recently, they announced that they there is $2 billion in capital to make some future acquisitions. So the stock gave a clear entry point by breaking that sideways formation here. So that was a great entry point there. The next entry point is going to be at around 1852. But the day trade of the day is RENN. One entry point here, another one there, and just got one here. But since then, the stock has not been as active, overbought. So those of you getting here or here are actually better position. So if ever we have a new high higher than 385, if you get in here or there, be quick to take some profit on RENN. And yeah, so that's it. But for swing traders, no, I think overbought situation there. So it's definitely not appropriate to hold on that position overnight, especially with American markets that are closed Monday. We will be there Monday because Canadian markets are open. And so far, folks, for swing trading, markets remain neutral. It remains a boring situation for swing traders. And as for day traders, well, some stocks here and there stand out, but really the resources that were expecting to make another bearish momentum today didn't do so. They stayed neutral, and on Monday they will be closed. Most of the ETF that tracks the resources will be closed, so UNG, USO will not trade, but we will monitor them on Tuesday to see if ever they can confirm another wave of bearish momentum, and then bearish ETF will be interesting. So I think this is actually the focus for day trading. Next week, we're also going to have several Canadian banks that will release their earnings. So if they post strong earnings, that might allow the TSX to start a bullish cycle, but so far the TSX remains neutral. So I wish you all a good weekend, have a good trading, and see you next week on Monday on the Swing Trading Show.